welcome to our show, Baylor, the Vice President of Corporate Developing at BitGo. What was the part in your education or family that brought who you are?
So I've always been interested in economics and the way that policy can impact economics. That was often a topic of discussion as a child, the way that government policy affected the success or failure of certain enterprises. And I got my MBA as like an apprentice to the Secretary of the Treasury. So I learned that. I learned about business writing, I learned about decision making, I learned about being able to say, I don't know, which is very important. And that's a big life lesson that I've learned multiple times in my career.
BitGo secures 8% of all on-chain Bitcoin transactions and serves over 1,500 clients across 50 countries.
So BitGo is one of the original crypto companies. It grew into a custodian. So that was a natural progression. If you are a financial institution, whether that's a fund, a family office, an exchange, anyone who's moving serious amounts of capital in digital assets, you've probably heard of BitGo, and hopefully you're using us to custody your assets. It's the safest place to store them.
Hello and welcome to Dinis Guarda YouTube podcast show. Once again, we keep profiling global leaders and personalities changing the world we live today, and especially the convergence between technology, blockchain, and AI, and especially the people that are bringing the ecosystems that we live and that we operate, work, play, and a lot of other things. I'm particularly excited today to do a special interview to someone that has been, I would say, in the crossover between a lot of different areas, between technology, finance, government, and a lot of different sectors. So I welcome to our series Baylor Myers, the Vice President of Corporate Developing at BitGo, a premier leading infrastructure provider of digital asset solutions, offering custody, wallets, trading, and financial for institution clients around the world. Founded in 2013, BitGo secures 8% of all the on-chain Bitcoin transactions and serves over 1,500 clients across 50 countries. Baylor has led the closure of BitGo's 100 million Series C funding around the valuation of $1.75 billion. And during his tenure, he's led 2 successful acquisitions that expand BitGo's product, suite, and services. Baylor also launched BitGo Ventures, a proprietary investment vehicle aimed at catalysing the digital assets ecosystem. Before joining BitGo, Baylor was appointed as the Deputy Chief of Staff of the U.S. then Treasury Secretary Steven Mnuchin in the first Trump administration. He was responsible for managing the department operations and supporting key initiatives such as the Tax Cuts and Jobs Act, the Phase 1 China trade deal, and the CARES Act, a $2.2 trillion economical stimulus bill passed in March 2020 in response to the COVID-19 outbreak. Baylor also served as White House liaison for the U.S. Department of Treasury, where he worked on government relations and coordinated efforts between the Treasury and the White House, particularly on the Tax Cuts and Jobs Act 2017. Prior to his government service, Baylor was a regional finance director for the Donald J. Trump presidency campaign, and he worked on the Trump Tower. So welcome to our show, Baylor. It's an honor to have you here, and you have probably one of the most, I would say, multidisciplinary approach in terms of profiles, because you touch so much different things, and as well quite complex things, because you touch investment, politics, White House, mixed with financials and investments, and as well, of course, all the efforts when it comes to crypto, and we take blockchain and a lot of different things. So I would like to start first to go a bit of your basis. Okay, so
Sure.
I think everyone, of course, has a beginning. A bit of your beginning, and what was the part in your education or family that brought who you are, and as well the moment where it made you at least be what you are today?
Sure. Well, I want to say thank you for having me. It's a pleasure to be here with you at historic Hatfield House. This is a beautiful venue, and we've had an interesting few days. And we want to thank Avalanche for hosting, I think, the summit. It's going quite well. As to me, what brought me to where I am today, it's a robust question, but it probably goes back to my family. Very family-oriented. I always have been my entire life. I'm very close with my parents, my siblings, cousins, aunts, uncles. I was very close with my grandparents. On both sides, maternally and paternally, the families started businesses. So my grandfather on my dad's side was a small business owner in real estate services. My grandfather on my mother's side, his family was involved in commodities for a long time, hundreds of years. So originally agricultural commodities, and then finally in the coal business. So I've always been interested in economics and the way that policy can impact economics. That was often a topic of discussion as a child, the way that government policy affected the success or failure of certain enterprises. So for our family, our coal company was sold in the 60s, some of which was due to government regulation. So that was a topic my grandfather spoke to me a lot about when I was relatively young, 9, 10, 11, 12. And then my father's side, my dad still runs the business, but as a small business owner, he's been impacted significantly by tax policy, by pension policy, by some of the investing trends on a macro basis. If you think about the real estate recession in 2008, that had a major impact on the family business, which is located on Main Street in Columbus, Ohio. So it's literally a Main Street business. So this is something that has always animated my thoughts. I feel incredibly privileged and blessed to have had a career over the last 15 years that has spanned both economic policy, government service, and now business in digital assets, which I consider to be the forefront of innovation in finance. And I think that ultimately it does go back to my family values and my general interests, which were set in childhood.
So you have a fantastic profile, and I love the family. I'm a very family-oriented person, so I know how important it is. And it's very important to keep the traditions, but as well the values, and especially keep that. Your profile is quite impressive in the sense that you shift from starting from your education and the bachelor to then starting a career in leading economic advocacy group. And then from Ohio, you end up actually in the White House, and you had a massive experience both under the Secretary, Deputy State Director of State, and as well under the first Trump administration. So just a bit of that context, because of course a lot of people, especially right now, you being on the crypto and the blockchain industries, the other side of the barricade. I would like just a bit of that context from Ohio to Washington, and that work that you did, and as well, what are the areas that you want to share with our audience? Because we have a lot of young people, and I think I always like to show the opportunities, because there's so much stuff and demystify.
Sure. Well, it is an interesting story. So my senior year of college, it was the 2012 presidential election, and I was 22, and I was involved with the Mitt Romney for President campaign as a very junior young staffer. I got quoted in the New York Times. I did an interview with the editor, Bill Keller. I had no idea what interviews were like. That was probably one of my first big interviews, and I didn't understand the difference between on the record and off the record. And I took a few positions that were in contrast with the candidate, so I ended up in a little bit of trouble. I learned a valuable lesson through that experience. And then I got involved in economic policy, and I worked for an organization that sort of at the forefront, or at the time was at the forefront of a lot of economic issues at the local, state, and federal level. My ultimate boss, so my boss's boss, was a guy named Corey Lewandowski, and I got to know Corey very well. He's a mentor, someone who's helped me tremendously, especially at that stage of my career. Corey left the organization in 2015 to go run a presidential campaign for a New York billionaire, and believe it or not, we did not know who it was. There are a number of billionaires in New York, and I think many of them have presidential aspirations. Corey kept it under wraps for about half a year. And then finally, now President Trump came down the escalator, Corey was there, and through his connection as the original campaign manager, I ultimately joined the campaign in the spring of 2016. I was connected to Steven Mnuchin at the time. He did not have a Wikipedia page. He was incredibly successful in business, from Goldman Sachs to his hedge fund days where he helped finance some of the Trump real estate projects, to then his purchase of IndyMac, which he then spun into a very successful enterprise called One West that was sold to CIT. So at the upper echelons of business, Steven Mnuchin was well known, but he did not have deep political staffing contacts. So I was assigned to him, and that began a 5-year journey that started at Trump Tower in New York and ended on January 20th of 2021 in the Secretary of the Treasury's office. Turned the lights out, walked out with him on the last day. So it was an incredible experience. We saw a lot in those 4 years in Washington. We could go a number of different ways in terms of digital asset policy or some of the work we did on the Tax Cuts and Jobs Act. That was a huge focus in 2017 and the implementation in 2018. I worked on the China trade deal, the phase one deal, so I spent a decent portion of my time in 2018 and 2019 in Beijing as part of the team that was negotiating that deal with David Malpass, who was our Undersecretary for International Affairs and went on to become President of the World Bank. David's a great friend and mentor as well.
From that work with White House and as well with governments around the world, you saw all the different parts of trading, the deals, and of course, like you said, I think two of the different things, like you mentioned, was the Chinese deal, as well the tax and cuts, but as well a lot of legislation that you are involved. So from being inside, of course, the biggest institution in the world in terms of economics and power, how do you see that element? Because there was working for a government and now you are outside of the government. I would like to touch that transition before we go to BitGo.
Sure. Well, I think that a lot of it has overlapped with business. I mean, you talk about deals. I mean, these are huge deals. Yeah. Mnuchin would often joke, when he was in business, he said, we always talked in billions, and now I'm negotiating in trillions. And the Treasury Secretary has a tremendous role, both domestically and internationally. So all of the spending bills that go through Congress ultimately have to be expropriated through the Treasury Department. So the Secretary is very involved. It's ongoing right now with Secretary Bessent and the leadership in the House and Senate on the tax bill that they're negotiating, the one big beautiful bill that's in the press right now. But Secretary Mnuchin did that consistently throughout his tenure under Speaker Paul Ryan and then ultimately Speaker Nancy Pelosi, and then with the Senate leadership between Chuck Schumer and Mitch McConnell. So these were huge deals. And in many ways, when you think about that combined with the China trade deal and then the Abraham Accords, of which Treasury played a role, and I was very honored to assist in a very small way, these are significant problems. And when you think about it through that lens, it makes digital assets and business a little more fun. These aren't life and death situations. It's investors who are taking risk and ideally are going to innovate the space and make things better for consumers through the innovations that crypto offers. But ultimately, millions of people's lives aren't at stake or aren't going to be impacted. These are people who are willingly going in and taking the risk. So it's a different vector. I've enjoyed it a lot. I think the stress is a lot less, which is nice. The 4 years in Washington were pretty stressful. And I think that it has been remarkably complementary between my experience at Treasury and now in business.
So coming back, one last question around
Sure.
your experience, the 4 years. So if you would look at it, I'm sure as you get in the time and you look back, what would be the area that you can say that you learned more? And I think for people listening to us, okay, being in the corridors of power and as well, there's a lot of work. And people sometimes only look at, okay, you are pro or con, and there's a lot of mythics around this. So I would like to see what would be the thing that more personal touched you and made you probably stronger in the sense of looking at the world in a different way that you want to share with our audience. Because I think it's very important to demystify the work that people like you do. And I know that it's not easy.
Yeah.
It's very complex. Like you said the most stressful 4 years. So
yeah.
I understand.
Sure. Well, I learned a lot of lessons. I was in my late 20s at the time. It was a unique position, reporting directly to the Secretary of the Treasury. And it was at times stressful. It was incredibly rewarding. I often joke, people talk about getting an MBA, and I got my MBA as like an apprentice to the Secretary of the Treasury. And Stephen Mnuchin is one of the smartest people I've ever met in my life. His brain works like a mainframe computer. He can consume reams of data, analyze it, and make decisions that 9 times out of 10 are spot on very quickly. And so I learned that. I learned about business writing. I learned about decision making. I learned about being able to say, I don't know, which is very important, to not BS answers and to not fake, justifications when asked. It's important to know what you do and to also admit when you don't know. And that's a big life lesson that I've learned multiple times in my career. And I think in terms of achievements, just being able to survive, and hopefully, if you talk to him or you talk to other people I worked with at Treasury, they'd say we were successful. I think we were. It was a remarkable tenure. When you think about what was achieved in terms of domestic policy with the Tax Cuts and Jobs Act, what we were able to do, and actually reforming some of the Dodd-Frank regulations, expanding access to capital for small businesses, and removing some of the onerous regulatory requirements on large financial institutions to unlock capital for more investment. That was a major piece of legislation. What we did internationally in terms of the China trade deal, in our work with the Middle East, setting in motion some of the peace process, which is, I think, being revisited right now as we speak. We'll see how it works. But all of that was, I think, incredibly consequential. I wouldn't say it was my accomplishment, but I was very proud to have contributed to it. And when you look at the economic tenure of President Trump in those years, there was very strong wage growth. We saw that among average Americans across the middle of the country and in an area that doesn't get enough attention. I mean, the wages were going up, the taxes were going down, inflation was very low. You know, we were sub 2 at certain points, gas was low. It was a very good period economically, and contrasted with the 2021 to 2024 period, I don't think you could have a starker contrast just with the inflation that was brought on by the policies of the next administration and the reckless foreign policy, you know, getting involved in 2 foreign wars. It really, I think, provides a strong highlight of what was achieved in those years based on what happened afterwards. And it was very sad that it did. And I'm encouraged and confident that the current team under President Trump in Washington will do very well over the next 3.5 years.
So from that position in the White House, you went to well, one of the biggest crypto exchanges in the planet. Mm-hmm. And as well, you went to the entrepreneurial world, business world. So first of all, probably the first question is, when did you first look at Bitcoin or crypto and blockchain? Mm-hmm. And then we go to BitGo.
Sure. Well, actually, it was during my time at Treasury. I remember we were in Secretary Mnuchin's office, and he would often have CNBC on the TV. And I think Bitcoin hit 17K. And it was like, okay, we need to pay attention to this from a policy standpoint and government. And he had shared an anecdote about being approached to invest, and he had considered it, but he wasn't totally sure. And I had heard about it in college, actually. I had a friend who I think had bought some Bitcoin at a very low price, like maybe $1 or $2, and then, of course, sold it, I think, when it went to 20. So I knew a little bit about it. Secretary Mnuchin asked us all to read the book Bitcoin Billionaires, which kind of charts the Winklevoss twins, early adventures in the space. That was very informative for me. And then ultimately in 2020, Secretary Mnuchin assigned me to the Digital Payments Working Group, and we were going to establish a regulatory framework from the executive branch across the federal financial regulatory agencies in concert with industry. So that was a goal we had for 2020, and unfortunately it was disrupted by the pandemic. But I did get to know a number of people in the industry, and when I left Treasury, I was thinking about what I wanted to do, and some people said, oh, you should go work for a bank, you should go to Wall Street, you should go this path. And another mentor and friend of mine, Brian Brooks, really encouraged me to go into the digital asset space. He had been the original GC at Coinbase. He briefly served as CEO of Binance US, and he was the comptroller of the currency. So it was really Brian who pushed me in that direction. And ultimately, through mutual friends, I was connected to Mike Belshie. Mike and I had a number of very long, substantial, in-depth interviews, and I think it was clear he had a need for someone like me who would help from an operational standpoint run a large organization. BitGo was scaling at the time. It had been founded in 2013, and it was a good match. It was a good personality match. It was a good role fit, and in my capacity at BitGo, it has developed, I think, very well. I've been very pleased with how it's worked. I've learned a ton from Mike Belshie. In my view, he is the smartest software engineer in Silicon Valley. And if you look at his career from HP to Netscape to helping build Outlook to helping build Google Chrome to being the author of the HTTP 2.0 protocol, the history of the internet is woven into his career. And it's been very humbling working close with him for over 4 years now.
It's really impressive. So you at the moment, you're Vice President of Corporate Developing at BitGo. So for people listening to us, so like you mentioned, BitGo was founded in 2013. It secures 8% of all on-chain Bitcoin transactions and serves over 1,500 clients across 50 countries. So tell us about, first of all, your work and BitGo. And for people that know less about BitGo, having a bit of overview.
Sure. So BitGo is one of the original crypto companies. It was founded by Mike Belshie in 2013 after he had finished up at Google. So in many ways, as I just mentioned, his career charts sort of the development of the internet. And I think for founders in those early days of the Bitcoin white paper, it seemed clear that finance was maybe the last industry to truly be disrupted by technology. And it was sorely needed. When you think about just the hours of operation of markets, it's not consistent with the way that we live in a digital world. So Mike started the company in 2013. It was one of the original wallet platforms, and that's the core foundation of our business still today. It grew into a custodian, so that was a natural progression. We did not go the exchange route, so we became a custodian, and we have significant assets under custody right now in the tens of billions at various points, depending on prevailing asset prices, over 100 billion in assets on our platform. And then we have moved from there to the next product line, which is institutional trading and lending. So we're an entirely institutionally focused business, which is why some retail investors may not have heard of BitGo. But if you are a financial institution, whether that's a fund, a family office, an exchange, anyone who's moving serious amounts of capital in digital assets, you've probably heard of BitGo, and hopefully you're using us to custody your assets. It's the safest place to store them, bar none. We've never had a hack. We've never had a major incident. We're 100% cold storage. It is as secure as it gets. It's so secure that Brinks, the traditional custodian, I guess, of traditional assets, as you might put it, they invested in our Series C round. So we have the certification from Brinks. They think our custody is as good as it gets, and they go way back to 1860. The Brinks truck taking money around and their vaults and everything else. So we're pleased to have a partnership with them. And we see the future of the business in staking, in stablecoins. We have a new product vertical called Stablecoin as a Service, where entities that want to build a stablecoin can contract with BitGo, and we can help you build that stablecoin on our infrastructure rails. And we see institutional trading and lending as well as a big future growth sector for the company.
So if you would ask, so BitGo being one of the most trusted names in institutional crypto custody, probably the most, what would be the main USP? You mentioned, of course, the fact that you have a fantastic, powerful crypto or cybersecurity, as well all the kind of regulatory approach, as well the technology cutting edge. But what would be that ecosystem that you build, especially with institutional organizations around the world?
Well, I think because of our reputation, we do have an extensive network of relationships with institutions globally. So we are regulated in the US, of course, but then in multiple jurisdictions across the globe. So we have our MiCA license and our BaFin license in the EU. We have our VAR license in the UAE, which is our hub. We've just opened up our office in Dubai. We're very excited about that. It was a big launch just this past month, and we're seeing a lot of institutional interest and adoption in the Middle East region. In many ways, APAC outside of China has been really aggressive, especially during the punitive regulatory years in the US from 2021 to 2024. So we have our MAS license in Singapore, and we have a good presence there. We're active in Hong Kong, and we're also active in South Korea, where we have a partnership with Hana Bank, which is one of their major financial institutions. So we're excited about growth opportunities in APAC. We also have a presence in Japan, and we expect that to continue to grow. And I think as more of the conversation moves towards tokenization from a traditional finance perspective, we expect to see more business generated in a lot of different ways, including in the registered investment advisor space. When you start having the Raymond James and the Charles Schwabs, those type of institutions offering to smaller investors digital assets, that will be, I think, the next kind of big wave of inflows for digital assets.
And that is a big thing coming. Mm-hmm. So before we go there, I have a question on that. So in terms of, so you led the BitGo's 100 million Series C funding at the time at around $1.75 billion valuation. Since then, I think it's becoming much bigger. So walk us a bit of you coming to the organization and how you try to push it to go to a new level, especially with your background as well.
Sure. So when I joined BitGo, for those of your viewers that have not followed the crypto industry press very closely, BitGo was engaged in an acquisition by Galaxy Digital, It's the first billion-dollar plus acquisition in the industry. And I joined the company to work on the integration of the two companies. And unfortunately, at that time in 2021, it was becoming readily apparent that the Biden administration was going to be politically punitive towards the industry. So Galaxy needed to list on the NASDAQ, and the SEC was not letting that go through. BitGo had an application before the OCC to get a national charter for the trust company, and that was left basically stalled to the point where we withdrew our application. So sadly, regulatory and political decisions got in the way of the growth of our industry in the US. And so given that Galaxy wasn't able to list on the NASDAQ and a number of other events, we were not able to complete that transaction. Happily, Galaxy just did list on the NASDAQ this past week. So congratulations to their team. We're very happy for them. We maintain a very strong commercial relationship with Galaxy, and we look forward to seeing them continue to succeed and grow on the NASDAQ. So when you think about that, we were essentially spun out of an M&A transaction, and this was now in late 2022. So the bull market had ended, the bear market was there, and asset prices were down. That was a challenging time. We had been scaling when I joined the business, and we had to significantly pull back to maintain a strong runway and to fulfill our fiduciary duty to shareholders. So we immediately then pivoted to try to raise a Series C to shore up the business and to make sure that everything remained stable. It was a very difficult time to raise money in 2023. The heavy, large, multi-$100 million checks that VCs and funds had been pumping into the industry were gone. This was not like 2021 where you had some of these crazy multiples and 8, 9, 10, $12 billion valuations for companies that didn't even have $100 million in revenue. So it was a very different environment, and we worked very hard. Mike Belshie, our founder, really hit the pavement, worked the phones. I assisted him as best as I could. He moved me into the current role as head of corporate development at this time. So it was a bit of baptism by fire. And we were able to get there by August of 2023, which was about the bottom of the market if you follow the trend lines. So in hindsight, it was a very strategically strong time for us to inject $100 million into the business because everything was down. We were very happy to complete the Series C, and we were thankful to our partners. As I mentioned, Brinks participated. And in the period after closing the Series C, we were able to complete 2 acquisitions of our own, which have enhanced our product suite, and they're going to continue to keep us strategically positioned to meet demand in the RIA and RWA space here in the months and years to come.
It's a massive, like you said, in 2023 during all the...
Very hard.
Yeah,
it's
hard.
Not easy.
So you launched BitGo Ventures, as well as a proprietary investment vehicle aimed at catalyzing the digital asset ecosystem. So tell us about the venture, how you're playing to shape the next wave of crypto and digital assets adoption.
Sure. So we were very excited to announce BitGo Ventures. We announced it at Token 2049 in Dubai, and that was in April of 24, so a little less than 6 months after closing the Series C. And our main motivator there was to try to catalyze the digital asset ecosystem. We wanted to provide mutual support for projects that we found to be worthy, especially in terms of tokenization. So L1s and L2 that have token projects are of interest for us. That's the thesis of the fund. And we have a small investment committee that is comprised of senior leaders at BitGo, and Mike Belshie chairs it. And we've been happy to work with a number of partners. Nirvana has done very well. We've been very pleased with the outcome, and we're continuing to deploy out of that fund. And we'll see if it scales further, depending on a few different events that may occur this year.
So one of the things that BitGo's strength is the fact that you have a huge global footprint, like you mentioned, regulators around the world. So you're based, especially your experience with regulations and working in the White House, and now with BitGo's strategy of adapt challenging regulatory environments. How do you see this growing, especially to create a kind of, I think one of the challenges we have with the mass adoption of crypto and digital assets properly is the fact that regulators don't align efforts together. How do you see that in a global environment, especially with your global footprint? Because I think it's a very important thing, first of all, to create stability in the system, and as well to create more fluidity of both liquidity and better solution and innovation?
Sure. Well, I want to be mindful that we're sitting in Britain, but I do believe that given the US's position globally with our currency reserve status and just the military presence that we've had across the globe since the Second World War, the US often has a very transcendent impact on global regulators. And that was one of the big issues from the 2021 to 2024 period, is that the US federal financial regulators were quite hostile towards the industry. And I think that had a chilling effect on regulators across the globe, especially in countries that are close allies of the US. And I anticipate, given the dramatic and much needed change in approach from the current regulatory regime in the Trump administration, that will cascade across the EU and Asia and the Middle East. And I think ultimately, once we get a strong framework in place in the US, and there's pending legislation that's being voted on, perhaps as we speak in Washington, a number of different bills that hopefully will be passed and signed before August, that will, I think, be a cornerstone of solidifying the strong foundation for crypto regulation across the globe. Certain countries have done very well, and they've outpaced the US. I was mentioning Singapore earlier, the UAE, even the EU in some aspects have been, I think, quicker to move forward on these regulatory frameworks. But once we get everything in place in the US, and then the agencies, the SEC, the CFTC, the Treasury Department, the Fed, all come together and probably issue some rulemaking based on whatever legislation is passed, I anticipate to no longer answer questions, hopefully, about regulation. It'll become well known, and we will not have to wonder what might happen. I mean, it's sort of like wandering around in the dark, and we're going to turn the lights on, and there will be a lot of clarity, and that will allow people to focus on business and continuing to innovate in the space.
Yeah, that's a very key thing.
Mm-hmm.
So as we digitize the world economy and assets, we are seeing an increased emergence of digitizing assets and tokenization. Mm-hmm. You touched that. I know that is one of your areas. Mm-hmm. And as well, you have a lot of experience. So what are because in the end of the day, one of the principles of blockchain is the capacity to create digital ID for anything. Mm-hmm. So this is a critical thing to avoid corruption, to create more innovation, and as well to create much more possibilities for people to exchange value between each other. So how do you see the digital assets and the tokenization, especially in areas like real estate, but as well a lot of major global industries? I think right now in the finance industry, we have a lot of cases. Even right now, BlackRock just launched recently their own tokenized fund, actually backed as well by Avalanche and others. So I would like to see how you see this across the board, especially working with institutions like you do, which most of the family offices and institutions are precisely looking at value creation, but as well keeping this value in the right way.
Sure. Well, you mentioned BlackRock, and I think a comment that has been much discussed among traditional finance and within our industry was from Larry Fink, essentially saying the future of finance is going to be tokenized. Everything will be tokenized. Equities, stocks will be tokenized. You'll be able to ideally trade them whenever you want, like Bitcoin, which trades 24/7, 365. And I think from an equity standpoint, it seems relatively simple, right? It's just a natural digital innovation. The technology has been there to do this for some time, over a decade, perhaps two. When you get into real estate, I think that is sort of the next frontier that is under sort of R&D right now. People are tinkering with how do you make this happen? Could you buy fractionalized tokens of a piece of property, a house or a hotel or an office building? And I know it's been tried a few different times, and we are anxiously awaiting, I think, more growth in that space. And I think some of it might be contingent on the regulation that's pending. And once that gets locked in, we expect to see, I think, companies offer a large array of different products there in RWA. It could really go the full gambit down to any kind of, physical asset, depending on who takes the lead. Now, that's not something where we would be actively involved, but we could, of course, support the tokens, and we could custody them, and we could help leverage liquidity off of them in that event. And we acquired a company called Brassica, which is very focused on RWA, and we have their team in place, and we're ready to go. And we're continuing to have conversations with large financial institutions and with startups that are active in the space to see how it's going to grow. I view RWA as probably more of a Q4 to Q1 26 sort of event. I don't think it's going to be immediate right now where we are, but we're excited for it and we're certainly ready to meet the demand.
No, this is a big thing, especially with your background and institutional. So one of the things that is very dear to me is how can we bring this innovation to create more wealth, but as well to find a better balance in society, which is a big challenge. So from your experience with both regulatories, big corporates and institutions, and as well with innovation around the technology. So one of the challenges we have when you face the global economy is financial inclusion.
Of course.
Financial inclusion, financial literacy. So I would like to touch how you guys are working on this, because of course you work with a lot of institutionals, but you see the challenge around the world. For instance, most of the world population is very young, and most of them, I think, especially right now with the emergence of AI and as well even gaming, and there's a lot of platforms where they're doing, but at the same time there's still a fragmentation between what organizations like you are doing and then how we bring this to mass adoption. And they have the traditional finance and the more innovative digital finance, which is what we're talking about, bridging. You've been doing that bridge. How do you see we can bring that together and at the same time bring this in a way that creates financial literacy, that we avoid a lot of the problems we're facing right now?
Sure. I think I can take it in a few different ways, but financial inclusion and literacy, I think, are sort of foundational to what has driven crypto over the last 10, 15 years, not quite 15. But ultimately, we saw in the US people were getting debanked. So it's access to banking services, which many people have argued, you have a right to your money. And I think in many ways that is true, right? If you are not able to be compensated for your work, that's a form of slavery. And if you don't have control of your compensation, what do you really have, right? And if someone removes your access to banking services, whether it's for a political reason or it's because you don't have the right relationship or you don't have the proper algorithmic formula to meet someone 2 time zones away, and you're not able to get a bank account, that's a big problem. And much of the world doesn't have that. If you go to India or China even, it's not what we think of in the US and in Britain, where you have these retail bank offices and people go in and they transact and there's someone behind the counter. All this is done on phones, right? And that is, I think, the ability crypto is going to provide to the global population, which is if you do make money, maybe you want to put it into a stablecoin. Maybe you don't want to open a bank account. And maybe that stablecoin is going to provide you 4 or 5% on whatever you have in there, whether it's $10, $10,000, $10 million. That's a big difference right now. If you have a checking account at any bank, you're going to make, barely anything on what you have in interest. The banks just don't pay interest anymore. And there's no reason why banks should be able to disintermediate interest income from the average consumer. And if you're a consumer rights advocate, you should want consumers to be able to have access to the same prevailing interest rates that large institutions have. I mean, that's just good policy, and it's good for people. It allows them to earn more money on their investments or their savings, whatever they have. So I think that is a huge innovation. And to be able to do all of that from your phone and the way these apps are going, it's becoming highly user-friendly. The interfaces are very easy to operate. You download it and you get it hooked up. And I think ultimately, where a lot of people are going to go, either the banks are going to innovate so they no longer are so unwieldy and serving as these middlemen that are disintermediating, strong interest rates from consumers, or people are just going to take their money out of banks, right? I mean, you'll just close your checking account, close your savings account, move it all to a stable coin that has 4 or 5% interest, and then transact with that stable coin. And the stable coin should be backed 1-to-1 with U.S. Treasury reserves. We feel strongly about that. And we think it'll also be good monetary policy for the U.S. to preserve our currency reserve status, because you have a bunch of stable coins that are now facilitating all transactions across the globe that are backed 1-to-1 by U.S. Treasuries. That is going to be tremendous for the U.S. Treasury and the dollar. So it's an exciting time, and I think that crypto's, it's fun. There's something cool about it. A lot of people talk about it. You'll find people in bars talking about Bitcoin and the price and what's going on and who's up and who's down. And there's something that has a mass marketing appeal that you just don't find often in finance. And I think that can help a lot with financial literacy as well. And people transacting. I mean, the best way to learn is by doing, in my opinion. not theory, but application. And if you start, if you want to take $10 right now and go online and, get an account at one of the exchanges and start trading, we encourage people to do this. We do it at BitGo all the time. We call it dog fooding, but trying the products. And we may have a retail offering soon for average consumers. But it's a great way to learn how the digital asset industry works and the many upsides and benefits you can have by investing in digital assets.
I completely agree, and it's a key element, because if you get that, we can actually do a lot of much more things, and as well create a better balance between all the different velocities. One of the things that you guys, of course, are doing massive is the stablecoins, and you have a lot of offering on that, and stablecoins is right now becoming a global, I think probably the most successful part of crypto. How do you see stablecoins? And I know that you guys have a lot of solutions around that. And how you see it going in a global scale? Because at the moment it's solving a lot of problems that even traditional systems, well, most of the traditional systems cannot do it, and effectively works fantastically. So a bit of your insights and BitGo on the stablecoins.
Sure. Well, we were very proud to be announced as the infrastructure provider for World Liberty Financial stablecoin USD1. I got a significant amount of press in late April, mainly because a sovereign wealth fund in the UAE is going to use USD1 to facilitate a $2 billion investment into Binance. So just think about that. You have an investment, a corporate investment that's being facilitated by a stablecoin. It's much easier for them, right? They don't have to go through a bank. Their fees are zero, essentially. So it's better for them. It's good for us. And I think all in all, the experience is much easier because the USD1 stablecoin is backed one-to-one by US Treasuries, which we facilitate, and we do all the minting and burning. So we have a great team that's working on this around the clock, and we're excited about USD1. We have considered going our own route with the stablecoin, but we're very happy with the current situation. We think competition is healthy, and we expect to see USD1, USDC, and USDT continue to compete, and there may be many more stablecoins. There's no reason why banks could not get involved in the game as well. They're just going to have to give up some of their long-held precedents and start innovating. And that's really, I think, the hot prod that is needed to drive this. And once you see transactions like USD1, MGX, and Binance, you have to think, if you're a traditional bank, are you really going to lose all this business by this innovative technology, or are you going to get in on the game? And that's in the Middle East. And there are a bunch of other ways that stablecoins could be used in areas that do not have easy access to banking services. So we're excited about it. We have a whole new product vertical called Stablecoin as a Service that I think I mentioned earlier, where entities can basically onboard with BitGo, and we can help you build your stablecoin. So we're looking forward to the continued growth in that space, and we're very excited about it. We're strong believers in it.
Yeah, that's a key thing. And I like the way you put that you can actually have traditionals and non-traditionals and find a bridge between that. So one of the last questions, and we are on the time. So when we talk right now, there's a lot of things happening. And you mentioned a lot of innovations, from stablecoins to digital assets, as well the way you're putting institutional and even retail together, and your fund as well. So how do you see especially on the institutional side, the adoption of crypto and as well blockchain, and as well some of the innovations you see coming in the next 3-5 years? You mentioned at least some quarters, but I would like to hear more on the innovation at large in the industry.
Sure. Well, I think we've seen with the ETFs a lot of institutional interest, and they're now actors in the space, right? So there are big ETFs around Bitcoin, and traditional financial institutions are making money off of them, which is, I think, a good catalyst for them to dive in deeper. There has been some regulatory clarity from the federal government in Washington that banks can, yes, indeed, custody crypto, which, in my opinion, but unfortunately there was too much ambiguity, and the banks are going to be deferential to the regulators, as they should be. They want to follow the letter of the law, and that's very important. So I think now having the green light to custody digital assets will continue to drive adoption and growth in the space. And as I've mentioned previously, all of these innovations in stablecoins and staking, and if you just even look at the asset price right now of Bitcoin, and many people are predicting it's going to go much higher, I can't imagine that traditional financial institutions are just going to wither away on the vine. I think they're going to get in the game, and we're excited to meet them on the field when they're ready.
So I have to ask one question on that. So bear in mind your experience with governments and as well with White House. So at the moment, there's a lot of discussions, and I think it's more or less public, that the White House might use reserves of Bitcoin, and there's already some governments in the world.
Correct.
How do you see that, especially because you have a strong, or one of the biggest business institutions on this area?
Yes, so we're very interested in that. Mike Belshie, our founder, participated in the crypto roundtable at the White House, the inaugural roundtable with a bunch of industry leaders and the president and David Sachs, who is leading AI and digital asset policy from the West Wing. And we were excited to hear about the strategic reserve. We think it's important, and I've been speaking with individuals in the federal government who are responsible for crafting the implementation. I knew from my time there that there had been a lot of Bitcoin and other digital assets that were seized by the IRS or law enforcement agencies in the process of doing their job. And unfortunately, in some cases, those digital assets were sold at very low prices compared to where everything stands today. So I think it's in the interest of the government from a fiduciary perspective to hold those assets and to get a good return on them for the taxpayer. And there are a number of revenue neutral ways for the government to continue to acquire more Bitcoin and other digital assets. And I anticipate that will be covered in the report to the president, which Treasury is working on right now with a bunch of other stakeholders, and I believe is due to be released in late July. So I would say stay tuned.
Oh, that's a good one. Okay, so last one. So AI, blockchain, crypto. We have the three things right now. AI is, the US is leading the race, and just we have the super initiative from the White House. But AI needs blockchain and needs crypto. So what are your views on the combination between the three, and especially on how we can actually make it, especially create an AI that is probably more human-centric and not potential dystopian, as a lot of views, but as well, how can we make it practical, like you said, because there's a lot of opportunities to make business straight away if you get the AI and the special crypto and blockchain working together. And you touch as well the importance of gaming, and most of this 4.5 billion people playing games every day. So there's a lot of ways how we put this combined together, but there's a lot of work to be done. I want your views on this.
I think it's very exciting. I mean, we've watched AI just absolutely explode just during my 4-year tenure at BitGo. And it's changing the way that we all live, on a day-to-day basis right now. I use it daily at work. We're integrating it deep into our company's operational functions. We're finding tremendous efficiencies from using it. And when you think about the blockchain and the way that crypto has facilitated gaming, especially with professional gaming, or just, you could go an entirely different route and look at corporate benefit programs, whether it's airline miles, hotel points, everything else. All of that could be tokenized. All of that could move into digital assets. And then you think about the way the blockchain will be able to support further innovations in AI. I think it's very early right now. And it all weaves together in a way that, we'll probably have a better understanding in about a year. But we're excited about it, and we intend to participate in it.
Oh, that's fantastic. Well, it's been an honor, Baylor. I have a couple more questions, but I will be respectful of your time. Congratulations on your work and BitGo, and continued success.
Awesome. Thank you
so
very
much.
much. Pleasure speaking with you.
Thank you.